Hello traders, Day Trader Matt here with businesswithtrading.com doing a trading strategy recap for Friday the 23rd of January. And today was a very nice day, even though it was a pretty horrendous day. Just looking at the action today, not very good. But we were able to make two trades and pull 7.5 points out of the market. Basically the same amount as yesterday, except we were able to make three less trades, and the two that we made were successful. Yesterday we were three successful, two unsuccessful. A little choppy P&L there, but we made 7.5 points yesterday, and interestingly enough, we made the same amount today, which actually at one contract comes out to $375. So imagine if you were trading 10 contracts or 20 contracts. Once you get all of the fundamentals down of trading, which it is kind of complex when you jump into it, and even when you're learning it, it's kind of complex. But then you hit that point when it all clicks and it just becomes a lot easier for you. And when I say easier, trading's difficult. There's no way around that. Some people say, you can use this system and this and that, and trading's easy. That's bullshit. Trading's going to be difficult. I don't care if you've been trading for 10 years, 20, 30 years. Trading's going to be difficult. And you're going to have those days where they're so mentally draining that you just want to go hide under a rock, go hit a punching bag, go to sleep, after you're finished trading. Those days are going to come. It's not about, telling you that, hey, if you, take my trading course, you're going to be a great trader, you're never going to experience a loss, and you're going to be a millionaire living in the beach next year. It's bullshit. That's a pie in the sky dream that, some people are out there selling, but, I don't really care. I'm not going to, feed you a line of crap just to make a few extra dollars. I don't really care. I make money on my own. I don't really need the website, but I enjoy the website. I enjoy meeting people. I enjoy helping people. And that's why it stays around. And it will be around until either I pass away or, hand the reins off to someone else, which is very, very far away in the future. Hopefully about 70 years from now. We'll see what happens. But anyway, let's get into what we did today. Today in the E-mini trading room, we made 7.5 points, which comes out to $375 for one contract. You take one contract, 7.5 points. That's what happens. We pretty much watched the market open here. A little choppy, and obviously in hindsight, choppy all day. And we took our first trade over here. We got long about 0 quarters, which right about here. Took a little bit of heat, but then the market came in our favor, and we were able to take profits. We were watching this. Market came up, then it started to roll over and stopped us out right down here. It is what it is. We probably should have taken profits when we had the chance, but it is what it is. I was thinking, maybe it was choppy, but perhaps something else could play out. It didn't, and we still made a little bit of money, and that's really what matters. So we watched this chop around a little bit more. The market came down here, and we actually got long again at 875 right here. 2048.75, and we were able to ride that up and take profits around 1 even, actually. So we took profits. Market kind of chopped around some more and chopped around some more, and then we ended up closing the site. Now what I didn't show you is we actually missed two trades. So we made two trades and we missed two trades. The two trades we missed, we would actually made money on, but they just didn't fill us. It is what it is, and I'm not. One thing in trading is whenever you miss a trade, you can't really care. You can't say, well, shit, man, if I would have made this trade, I would have made all this money, and look at this, I missed this trade. It doesn't matter. Neither, trades are not correlative unless you make them correlative. And a lot of new traders, sometimes novice traders, make them correlative. They're not. For example, when I drive, I usually call someone and talk while I'm driving. I'm on my Bluetooth. My phone's in my pocket or on the passenger seat. Depending on if anyone's riding with me. Usually, if I'm talking on the phone, I'm driving by myself. So I'm on my Bluetooth. I'm driving. Those two activities are not correlative. What makes them correlative is when you have your phone in your hand while you're driving and you're talking on your phone, holding your phone. That's correlative. So, and that's why a lot of states have outlawed that, because a lot of people drive badly. You have one hand on the wheel and you're focusing on holding the phone and talking on it, and sometimes you're propping it up on your head, and that causes accidents. When you have your Bluetooth in your ear and you're driving, it doesn't matter. You can talk and drive at the same time, just like you can talk and chew gum, or walk and chew gum, or walk and talk. So hopefully that gives you an example of that. I thought it was good, but you can always, if you have better examples, you can always post them, which I'm sure a lot of you people have some better examples, because I just came up with that on the fly. I record these on off the cuff. I don't I don't script anything, because I think that's a dumb way to do it. Trading is off the cuff. You can script the market, but when it comes down to it, price is going to go where it wants to go. Sometimes it's going to go a different way. Sometimes it's going to go the way that you thought it was going to go. But if you keep trading the way you think it's going to go, even if it goes a different way, that's a good way to get hurt in the market. So anyway, I wanted to point out what we did today. We did take a couple of trades that we didn't get filled on. One of them traded one tick away from our entry. I thought it was pretty interesting. And I was remembering, because I was, I've been talking to some members of the site, and we're talking about how we got into trading. I'm sharing my story of how I got into trading, and talking about my first couple months trading futures. Trading stocks, nothing really great as far as stories there. But trading futures, I definitely had an interesting start. And I probably experienced everything and a little bit more than a lot of traders experience. All of the bad qualities, all the bad things that you experience, the revenge trading, the trading after a month you've made thousands of trades and you're down a couple $100, and you're like, what the fuck, man? Because of commission. Commission just killed me. And it's not because the commission was large. It had nothing to do with that. Commission was like, I don't know, 425, 5 something. Actually, I think it was like 4.5 per round trip. It was something minimal like that. This was back in 2003, 2004 maybe, probably 2004. And I made like thousands of trades, and I'm down a couple $100, like 130 something. And it's like, wow, all of that, all that mental anguish, frustration, and I'm down I'm down 130 something dollars. It's sick. And then you eventually do it again the next month, and you just blow up your account because you just are angry. And that was my introduction. And I that's why I wanted to point out today. Talk about missing the trade, and because that can be more frustrating than actually losing money on a trade. Statistically, it is. It is more frustrating than actually losing on a trade. So anyway, I wanted to talk about that, talk about that a little bit. Hopefully, it made some sense to you. Also, I want to talk about a trade that we caught in the swing trading room. I talked about this in the day trade room because I give an analysis every day after the room is over. I give an analysis, and I talked about this. Market gets up here, I want to short it, and I talked about 2044. I talked about that. I talked about the possibility of the market going a little bit lower, but if it sets up late in the afternoon, you really can't go into the larger downside target, and there's really no point in holding over the weekend. That doesn't really make sense as far as I'm concerned. In my standpoint, that doesn't make sense. In the options room, we hold over the weekend. In the futures room, sometimes we hold over the weekend. But, the way that the market has moved lately and the way that it's acted, I don't really see too much of a point in holding over the weekend. We made way more than what we risked on the trade. Our risk level, we shorted at 2057. We stopped at 2060, and our first target was 2044. Because it's a Friday, we just took all of our profit off at 2044. Not bad. We made 13 points. 13 points is not too bad at all. A little over 4 times our risk. That's a really good trade. I'll take that every day. Why not? 4 times, a little over 4 times your risk, like 4 point something something. I don't really care about the decimal. I'm just going with 4 because that's an even number, and we can all say it's 4 times. That equates to $650 per contract. So you traded 10 contracts right here, you make 4 times your risk, make a lot of money. You could have gotten in here, you could have gotten in here. We talked about this in advance, we talked about this over here. And, sure enough, that's what happened. I thought maybe it could have come up a little bit more, but this was the place that we decided to stand at, and we were able to get in and write it down. Trades like that are just awesome. You make 4 times your risk, and most of our swing trades are like that. They make 4, 5, 10 times your risk. Sometimes a couple hundred. Well, maybe not that much, but I have to look at some trades because some of them are just massive. We got in the dollar last year, and we were actually able to hold it up until a few days ago. We took profit at 94. I think it's actually probably yesterday we got out. That was a really, really good trade, and we made exponential of our risk, if that makes sense. We exponentiated our risk. Okay, that's a good way to say that. Alright, so anyway, wanted to highlight that. That was another really good trade. I'm starting to make these strategy recaps a little bit more than just what we did in the trading room. Just because I think that makes sense. That's what a lot of you guys have been asking. So if you have any questions or suggestions of what you want to see, you can definitely shoot me some emails on that as well. A lot of people send me emails like, I'd like to see this, I'd like to see that, or can you talk to me on the phone for a few minutes? I want to ask you some questions about blah blah blah. Stuff like that. And you can feel free to ask. My time's definitely valuable, but if you want to ask me, something about something I said, or ask me about a course or the trading room or the options service, you know, I can spend a few minutes and talk to somebody. I really enjoy meeting other people and just being of value, and that's a lot of fun for me to be able to do something that I love every single day, which is trading, and then be able to actually share that with people. It's really really gratifying for me. So anyway, if you have any questions, no such thing as a dumb question. If you have a question, just ask it. You can email me support@abusinesswithtrading.com. You can post under the video. You can give me a call under the About tab of my website, abusinesswithtrading.com. There's a Contact Us button. You can contact me there. There's also a phone number there as well. You can give me a call. If I don't answer, just leave a message. I'll get back with you. And with that, everybody, have an awesome, awesome night. Have a great weekend. And I'll see you back here in the markets. Thank you.